Welcome to the New York City Bar Association podcast. Opinions expressed are those of the speakers and not necessarily of the City Bar.
Hello, everyone, and welcome to another podcast hosted by the New York City Bar Presidential Task Force on Artificial Intelligence and Digital Technologies. I am Dana Lennon, co-chair of the Subcommittee on Digital Technology Issues for Nonprofits, and I'm pleased to be joined by my co-chair, Lori Nuckolls. Today's podcast is designed especially for nonprofit professionals who are beginning to explore the world of digital assets. Lori?
Thanks, Dana. As Dana said, my name is Lori Nuckolls. I'm co-chair of the subcommittee, and we're also pleased to be joined by members of our subcommittee, Laura Angel-Lalanne and John Bennett. Our subcommittee is dedicated to exploring how nonprofit organizations are responding to and leveraging emerging digital technologies in their work. Today, we've brought together nonprofit leaders to share their experiences, challenges, and strategies. But before we hear from our panelists, Laura will provide a brief overview of what digital assets are and how nonprofits might engage with them. Laura?
Thank you, Lori. As Lori mentioned, I'm one of the members of the Subcommittee on Digital Technologies Issues for Nonprofits. And in my legal practice, I work with private clients, both individuals and foundations, who make gifts and grants to nonprofit organizations, but I also work with nonprofit organizations. And while many of my private clients are very familiar with and often hold digital assets, the nonprofit organizations I work with, especially the smaller, more leanly staffed nonprofits, often aren't as familiar. So we thought it would be helpful to provide a very quick overview of what we're talking about today when we reference digital assets. So at a very high level, digital assets refer to assets that are in the form of electronic records with value that is stored digitally. And like many other assets, they can be bought, sold, traded, transferred. In the nonprofit context, three common types of digital assets are convertible virtual currencies, stablecoins, and NFTs. So convertible virtual currencies include cryptocurrencies like Bitcoin or Ethereum, which aren't issued by a central bank or financial institution, as is the case with traditional currencies like the US dollar. They're instead verified and recorded on an unchangeable public ledger that tracks those transfers. Stablecoins are a type of cryptocurrency designed to maintain a less volatile value by pegging to traditional assets like the US dollar. And then NFTs, or non-fungible tokens, are unique digital identifiers that are used to prove ownership of assets, often tied to creative works. So for nonprofits, these digital assets have the potential to support fundraising, increase transparency, engage donor audiences. So now we're going to hear from our panelists who will provide some real-world insight into these emerging practices. Thank you for being here today. First, I'd like to introduce Kevin Scaly, Deputy Chief Development Officer at Doctors Without Borders USA. So Kevin, first, I'd like you to introduce yourself and your organization a bit more, but then you can dive right into telling us how Doctors Without Borders USA decided to engage with digital assets, when, how, why, and what issues your organization considered in making that decision.
Yeah, absolutely. Well, thanks so much for having me here. Really appreciate it. Kevin Scaly, like you mentioned, I serve as the Deputy Chief Development Officer at Doctors Without Borders, MSF USA. And for those of you that aren't familiar or may not be familiar, Doctors Without Borders, MSF, is a international humanitarian aid organization, and we are providing aid in 70 countries around the world. A little bit about me personally is I've been in nonprofit fundraising for more than 20 years. I've been in this role where I'm really partnering with our Chief Development Officer with a focus on making fundraising as efficient and effective as possible across the department. Been in the role for about a year, but prior to this, I've served at organizations of all sizes and have definitely had a very large focus on all things digital. So prior to this, I was the Chief Relationship Officer at Charity Navigator. Before that, I was at Smile Train, and before that, I was at higher education. And so a little bit about our journey, which I'm looking forward to rolling up our sleeves and getting into as a group. into digital assets, the first thing that we did was, as fundraisers, we wouldn't be good fundraisers if we weren't really evaluating the size of the opportunity and also looking at the donor profile. And so digital assets are quite unique, and I'm sure we'll talk about it over the next hour, in that the folks that are utilizing them and donating them, typically they have an average income of $110,000. There's an average donation of about $10,000, and the average donor is between 18 to 29. And when you compare that against the average MSF donor, that's about 70. So we looked at that as the opportunity. And then from there, we started to ask a lot of questions and a lot of things I'm sure that we'll cover today, like what are the barriers to entry? What are the risks? What are the ethical and policy concerns? And then also, what are the practical considerations?
Zack, can you share your organization's approach and why it's important to build a system on digital rails? Please also introduce yourself and briefly describe how Endaoment.org helps facilitate crypto donations for nonprofits, particularly for smaller organizations with limited capacity.
Absolutely. Happy to. And also, thank you for having me here. As you shared, my name is Zack Bronstein. I'm the COO of Org. And if you're looking for us, Endaoment is spelled a little differently than normal, Endaoment. Background, before joining Endaoment, and I've been here since founding a little over 4.5 years ago, is really split evenly between finance. I was at Morgan Stanley for the better part of a decade. And prior to that, I worked in a variety of different development roles at nonprofits, really up and down the East Coast. So the question, why digital assets? For us, we wanted to create an organization that supported donors who wanted to give digital assets and organizations that wanted to receive donations that started as crypto, but maybe weren't delivered as crypto because they weren't ready to kind of have a full-fledged jump into the crypto pool, as it were. For donors, really important that digital assets can be received in the form of a donation, because the best thing, and of course, this isn't tax advice, but the best assets to give when you're making a donation are assets that have a really low cost basis and have appreciated since you purchased that asset. And there are few assets that have appreciated percentage-wise as much as some of the digital assets that were brought up earlier, Bitcoin and Ethereum among them. And they're really wonderful for donors to give and receive tax deductions, or potentially receive tax deductions at the fair market value at the moment that they give those assets. And for nonprofits, important to be able to receive digital assets because they need to meet donors where they're at, but also the speed with which digital assets can be donated is actually a lot faster than cash or than stock can be donated, right? If you initiate a digital asset transaction, the recipient receives the assets that you're sending really as that transaction completes. And that's not a matter of hours or days. That's really a matter of not even minutes, but kind of seconds. So it's about the speed, and it's about meeting donors where they're at to make sure they can give the assets that they have. And for nonprofits, in particular for small nonprofits, we wanted to design a system where organizations could receive assets without necessarily needing to open up a Coinbase account or create a digital wallet so they could receive Bitcoin or Ethereum directly, right? And that's why our platform is really designed around the concept of donation comes in, we liquidate whatever asset is coming in, be it Bitcoin, Ethereum, NFTs, or otherwise, into stablecoin. Those stablecoins sit on our platform until we're ready to issue a payout to an organization. And we'll get a little bit more into this one or two questions down the line.
Zack, can you elaborate on that a little bit? Like how does the payout process for charities work? Is it a donation by donation basis that they get to make that selection?
Importantly, the way that we engineered this system is, and I should have mentioned this before, apologies, we are a California-based public benefit corporation, a 501c3, and chiefly we operate a donor advised fund model. Right. So over, they make donations into their donor advised funds, and they can issue grants to any compliant U.S. nonprofit. The way that the payouts work on the nonprofit side is we receive a grant for such and such organization. Perhaps Doctors Without Borders. We've actually made several grants to Doctors Without Borders previously. We'll get in touch with the organization after we receive the grant, and say, hey, you have received a grant from such and such fund. If it has a restriction or special instruction, we'll share that with the nonprofit, and we'll try to meet the nonprofit where they're at. So they have the opportunity to tell us, hey, we actually are crypto savvy. We can receive stablecoin directly in this wallet or in our Coinbase account. That's great. We'll support that, and we'll send them USDC. That's US dollar coin, which is Circle's USD stablecoin. Or for something like 99% of organizations we work with, they say, hey, that's great. Thank you for receiving crypto, but can you actually make a payout in the form of an ACH payment? And all that requires is sharing with us their banking information so we can issue that ACH payment. And we are making payouts, as you said, on a donation by donation basis. Donation comes in. If we've already established a payout location for the organization, we'll pretty immediately pay out that organization. Otherwise, we'll just be in touch with them and then make a payout as soon as we have that information handy.
So you said 99% are choosing the ACH. So can you give an example of the 1% that don't and why they might not?
Yeah, so there is a really fantastic organization called Crystal Hearts that does humanitarian work in and around Ukraine. That's kind of the perfect example of an organization that actually doesn't want to receive ACH payments. They would rather receive USDC payments on Ethereum. What this means is that as we issue a payout, as I mentioned before, they're receiving those assets as we are issuing the payout. They're not waiting for a wire or ACH payment to complete in a banking system. Those funds are immediately accessible to them. And they are an organization where they have, like boots on the ground in Ukraine doing work on a regular basis. Really important that they're getting those assets as quickly as possible. And because they want those assets quickly, because they're crypto savvy, essentially donations come in and we're immediately paying them out. They're in the organization's wallet and available for use. That's really important to their ability to not wait and get stuck behind, banking systems and waiting times, and can instead focus all of their energy and time on doing the good work that they do.
What sort of policies and procedures did you put into place to implement your strategy with respect to fundraising, with respect to these types of assets? And would be interested in understanding or hearing just what your experience was as that went through kind of, training through staff, training through senior leadership, and like interest from those parties in, doing this and then how to do this.
Yeah, I think anytime that you're talking about digital assets, crypto-wide spectrum in regards to their understanding, you have people that and they really love it and they follow all the coins. And then you have people where you talk about cryptocurrency and that's synonymous with Bitcoin. So you have to kind of approach this subject in that way, is that you're going to have people that are all across that spectrum. Certainly we thought about that when we're approaching in regards to how do we pull this together and how do we present this to the team? How do we present this to the board? And what the team actually did is that they did some market research. Some of it was just bench research in regards to pulling what are other organizations doing? What are some of the key players that are in the field that are helping organizations? What's the size of the opportunity? Like all those questions that I had named at the jump of the call, okay, let's put that on paper and let's write it down. Let's agree upon it. And then from there, we can base all of our presentations and our trainings based off of that. So we started with that. It rendered to a 36-page document. After getting some kind of initial buy-in, is that was something that, fortunately, Doctors Without Borders is part of a larger movement. So like I mentioned, we work in 70 countries around the world. We actually fundraise in 40 plus countries world as well. We call those sections of MSF. And so we have these different, what we call communities of practice that we can pull from. So we did have other sections of MSF, UK and Australia and others that were already accepting cryptocurrency. So the ability to be able to lean on them, learn from them, bounce some of the ideas off of them as well. So that was really helpful. John, when you ask about policy specifically, to me, the end all be all policy for something like this is your gift acceptance policy. And so that's where an organization should be going through and listing all of the different types of gifts that they will receive, all of the different types of gifts that they won't receive, some of the nuances of those, if there's certain amounts, if there's certain approval that's needed, if there's certain types of stocks and securities they will accept, but not others. So ultimately, we had this land into our gift acceptance policy. Obviously, that's something that needs to be reviewed and approved by the board. Happy to delve a little bit deeper into like what that process looks like and the type of warming up to this type of thing. To play it a little bit further from a training perspective, like Zach mentioned, is like when you're using a third party, is that it's not as much training in regards to, okay, how do we actually receive this? How are we liquidating it? How are we recording it into our database? We also use, we're currently partnered with the Giving Block. And so it's a matter of still that there is this processing of the donation that's taking place there. It's how those donations are actually getting recorded into our database, how we're receiving the funds, and then also understanding the acknowledgement process in regards to how our donors actually receive a receipt of their gift. And then also a matter of like doing some due diligence. And so I'm sure we'll probably talk about this a little bit, is just maybe like some of the questions and concerns that come up. Those are questions that came up our process as well. So in regards to any sort of risk, how are we mitigating that? And so we actually have a process where we're doing some due diligence on if there's a digital asset donated $25,000 or more, that we actually screen that. And of course, we included everybody along the way, finance and legal and systems, because we wanted to make sure that as we're making a decision, as we're moving forward, that we have alignment across the organization as well.
A couple of follow-ups on that. I mean, in respect of taking the experience of MSF UK, MSF Australia, et cetera, in terms of, accepting digital assets generally, do you feel like you all were, as MSF USA, what was the difference between, you and some of the non-US organizations in terms of the interest in or ability to accept crypto in digital assets generally? Like, did you all feel like you were sort of, behind the curve, or was there a reason that some of your partner entities were ahead of you on this? Just curious generally.
Yeah, it's a great question. I think like the old adage, because the sector is always like 10 years behind its for-profit counterparts. And I think Zach was kind of alluding to this as well, is that at a nonprofit, you got a lot of responsibilities. There's a lot of different hats that you're wearing. And so there are the things that you absolutely have to get done. And then there's the things you want to get done, that they're not like a need to get done. And so certainly like we were pretty late to the game in like launching a CRIP program in 2022. There are folks that started 2009 to 2010. And I do feel that, based off of my experience in working in kind of international payment systems, is that there is a little bit more flexibility, especially in Europe, where you have countries that have different currencies, or the payment technology is much faster evolving. So like, the tap to pay that we're all using at checkout, that's been something that's existed in Europe for quite some time. So I just think that they have a different mindset. And in the US, maybe there's kind of this kind of slow evolution of like, okay, we're going to see how this goes over the course of time. Certainly for us, it benefited us in that it gave us comfort in, hey, we have other sections of MSF that are doing this, that have navigated this. A lot of the kind of questions and concern we have, well, we can actually go to folks that are directly within our movement to be able to answer that and get trusted answers back.
That's great.
And so, in terms of kind of making those decisions, with respect to, you said you kind of went to the board, you gift acceptance policy, obviously always for nonprofit organizations, kind of the critical piece in figuring out how to do all of this, and then figuring out what the scope of all of this is. When you went to your board, what was that experience like? I mean, were there folks who were skeptical? Was it kind of universal acceptance? Was the fact that there were other sections who were already doing this helpful? What was the experience there? I know that, and this is not specific to MSF, but, as a general matter, I think I've seen a broad array of reactions from boards of directors of organizations, from we have to be doing this because this is the future of finance. This is, where we're going to be seeing donations come in from, to, some high levels of skepticism as to, is this putting us at risk? Or do we have issues here to think about? How did that process go?
Yeah. I mean, it's everything you just named, right? And that's even why I started this kind of theme here, specifically of talking about the wide range of people that you have. We're really blessed to have a board that is really supportive of our organization, and the old adage of kind of noses in, fingers out is a really good way of describing our board. Like they want to see like how can they oversee and make sure that the organization is staying on the right track without being involved in the day-to-day management. So really lucky to have that. But yeah, it was exactly what you would imagine of, hey, we're proposing this. Fortunately, we're giving a pre-read. We're having some conversations kind of leading into a board meeting and then actually doing a presentation. And what was nice is that it was a presentation that encompassed everything that was in that 36-page document in a really digestible way. And then also a matter of bringing in kind of other elements from other members of the MSF movement as well. So to be able to show, hey, we're not going it alone. We're not the first ones to do this. Here's what their folks are seeing within the sector. Here's the opportunity. And then here are all the things that we've considered, all the questions that we've asked to get us to this point. Now, of course, there's going to be questions that come up from the board that layer on top of that. Some of those you're going to have answers to, some that you're going to have to research and go back on, but ultimately to get that comfortability to be able to make that adjustment to a gift acceptance policy and to be able to move forward.
Great. Thank you.
The New York City Bar Association hosts hundreds of CLE programs on the latest hot topics in the legal profession. Get all of your required CLE credits, meet other practitioners in the field, and hear from leading experts. Choose from a wide array of in-person and virtual programs, as well as the City Bar's menu of on-demand recorded programs by visiting nycbar.org/events. Save 10% on solo or select CLE passports by using code POD24. Or call customer relations at 212-382-6663 and use the code when you sign up.
So Zach, kind of switching gears a little bit here, given that you all, you were sort of formed and intended to do exactly this, was there a similar approach, different approach in terms of like what you think about for policy, for procedures, for, what your trainings are, what you look out for, what your staff looks out for, what your board is interested in? It's a fairly broad question, but would be interested in understanding, kind of how you all looked at that as you were, putting into place what you all do, on a day-to-day basis.
Yeah, we went through a largely similar process to the one that Kevin just described. We have a board that has both folks that have been involved in nonprofit and really their first exposure to crypto was engaging with endowment, all the way down to folks that have really never engaged with nonprofits in the way that they now do as a board, but are really crypto savvy. And it was important to us to make sure that we were kind of combining all the best practices that we were gleaning from each of these board members. So I think two important things in the way that we thought about how to formulate this organization and also all of the protocols that go into place kind of behind the scenes to keep the lights on and the water running. One, protocol security, and two, in investment control. For protocol security, we thought it was really important to do the same kind of vetting that Kevin was describing that Doctors Without Borders does, whether that is geo-blocking specific areas of the world that cannot access our application to, there were a number of Ethereum addresses that were on the OFAC sanction list, actually up until recently when they were removed, making sure that any of those addresses were not able to connect to our site, to make donations, really to engage with us in any way, and a number of other security policies that, we could go into if you want. But important to us at the forefront to create an organization that made donors feel safe in the way that they were engaging with us and not feel like they were kind of sending their Ethereum or their Bitcoin into a black hole and not knowing what's going on. Really, we wanted to take advantage of the transparency that comes along with blockchain technology, because while blockchain and crypto can sometimes have a bad reputation for kind of being pseudo-anonymous, what's really lovely about the way that blockchains work is that if you know enough about the system, if you know enough to look at a blockchain explorer website, you can really see all the ins and outs for any given address. So if you were to go to etherscan.io, which is a really great block explorer for Ethereum, and you were to type in any of the endowment addresses, you'd be able to see all of the assets as they flow in to organizations or donor advised funds. and all the assets as they flow out of those organizations as we're making payouts. Really important to us to create a system that is safe and transparent. And on the nonprofit side, we do all of the same things that other nonprofits do, from filing public 990s to, because we do fundraising in California, conducting third-party audits of our entire system, and that's both on and off-chain systems on a regular basis. So, that covers the kind of the technical protocol security of it all. Also important to us is the way that we hold assets, right? People are donating primarily appreciated crypto assets like Ethereum and Bitcoin. As folks make the donation, while they can request, hey, I'm giving you 10 Bitcoin, I want you to liquidate 1 Bitcoin a month for the next 10 months, that's not our standard practice. Our standard practice is donation comes in and we are immediately liquidating those assets into a stablecoin, because we wanted to make sure that if an organization were to receive a notification from us, hey, you have a gift of $100,000 that we're waiting to pay out, that if they wait a week to do some due diligence on our organization and talk to members of their board before accepting the gift, especially if it has a special instruction or restriction, that when they come back to us, we don't say, hey, well, now it's $70,000 that we're ready to pay out, right? So as assets come in, we're liquidating them. And of course, we're a donor advised fund provider. We are crypto-centric. All of our assets live on the Ethereum blockchain. So what does that mean? It means that we have a lot of donors that want to have assets inside of their donor advised funds invested in the very crypto assets we're talking about. Ethereum, Bitcoin, yield-bearing stables, things of that nature. And while we do have a very flexible board, they have set an investment policy that controls the way that all protocol assets are invested in all of these groups. So we support yield-bearing stables that I mentioned. We support a number of traditional asset investments. Those are uncapped, meaning folks can put in really any amount of their donor advised fund assets into those portfolios. That's just what we call the investments on our platform, as they wish. And for other assets like Ethereum and Bitcoin, we don't put in more than 35% of all of our protocol assets ever into those investment pools. And that's our way of making sure that we are upholding, prudent investment management of all donor advised, charitably contributed.
No, I mean, I think that's an interesting, important point that you all, as an operator of donor advised funds, have to comply with, the code provisions that apply to DAFs. But have you all had circumstances where nonprofit recipients of funds that are coming in from you have had questions about, like, how do I ensure I know where this is coming from? Or like folks who are just kind of skeptical about, I'm receiving assets from this entity, they're crypto assets where they originate from, notwithstanding that we are going to just receive cash at the end of the day from this. How has that process worked, and how have you all sort of traded your recipients?
Yeah, John, it's an interesting question, because really the answer is education. So let's say that we have an organization, let's use the same example. They have a $100,000 gift, maybe it came in Ethereum, and they say, hey, we want to get clarity about where this came from before you all got it and converted it into stablecoin, and eventually we'll convert it into cash and send it along to us. I'll speak personally, I really enjoy taking the nonprofit on a little journey to help show them the benefits of using blockchain technology and how transparent it can be. So we can have a screen share. I can show them the exact transaction where we received the Ethereum that was given as part of this donation. And then we can actually go back. We can see the wallet it came from. We can see if it was sent to that wallet from anywhere else. Typically, what we see is that Ethereum is being purchased on a Coinbase or on a Kraken, which are centralized exchanges that allow you to use fiat dollar bills to buy Bitcoin, Ethereum, other digital assets. They tend to go from there into a digital wallet and then do an endowment donor advised fund, and then out the door is a grant to a nonprofit. But I think what's really helpful in that process is just demonstrating how you can track that throughout its life cycle, the donation. And also important is that we have something like 5 to 90% of donations that move through our platform contain donor PII, right? So if you own a donor advised fund, if you operate a donor advised fund and you make a grant to a nonprofit, it's actually up to you as the donor, whether you're using a Fidelity DAF, a Schwab DAF, or I guess a DAF Giving 360 DAF or an endowment DAF, whether or not you want your information with the end recipient. Using Fidelity's data from, it's a little data now, is 2023, they're somewhere in the neighborhood of like 70 to 75% of their grants that go out include that donor information, attribution information. For us, we were happy to find that it was actually a lot higher. So again, something like 85 to 90% of grants that we're sending out contain the donor information directly. And we always encourage the nonprofit to actually reach out to the donor and check in with them if they have any questions, right? So we don't want to be a block between the donor and the nonprofit, being able to talk to each other to understand, hey, why are you supporting us? Why are you supporting us with this gift of Ethereum or of Bitcoin or of NFT sales, right? And it's important to us to make sure that we're making that connection to the point that we actually default to including donor information and sending it to the nonprofit. And in order to kind of withdraw or redact that information, donors have to use the opt-out system of saying, actually, please don't share my information. I want to give anonymously to nonprofit X.
That's really interesting. Kevin, I mean, are you similar experience? Is it, I mean, obviously there's a different level of ability to give anonymously directly to a nonprofit than there is to request that a DAF send something through anonymously. But has it been your experience as well that from like a sort of risk and security perspective, you're able to kind of understand what's coming in, who it's coming from, and folks have been comfortable from a receipt perspective on that?
Yeah, I mean, the organizations that I've worked with, it's kind of run the gamut. It's everybody just putting, hey, here's a Bitcoin wallet, send money to this organization. Not that I've been at organizations that have done that, but I've seen that, all the way up to folks that are using an endowment or another platform to be able to, gather information about the donors coming through and be able to kind of process it in a way that, they're getting those funds in a way that they can use them and don't have to necessarily go through the conversion side of it. I think a lot of it comes down to it's like a fear what you don't understand kind of thing. But that is like one of the kind of key things that often comes up is the anonymity side of it. And even when Zack was like talking through that, and he was like, oh, I get to go on this education journey and talk about like, hey, it hits this wallet to this wallet. I can think about the nonprofit executive that's sitting on the other side that's probably thinking, yeah, but I just want to know their name and I want to know their address. And then I want to know all this other information that I can, pull that together and pull together a really nice package profile. So I think it is just a matter of like the comfortability of over time understanding to say, hey, at the end of the transaction, you still have a really big hearted person that wants to support your mission, but they're just giving in a different way.
Thank you. So I'm going to turn it back to Lori now to ask some questions about sort of broader legal and regulatory considerations.
Oh, great. Thank you both, Kevin and Zack, for giving insight into organizational thinking. Let's turn to governance and legal considerations. One of the goals of this series is to surface areas where laws or policies might be lagging behind practice. Your practice indicates that technological innovation will inevitably take material form in custom and procedure. With respect to stablecoins and the regulatory infrastructure for digital assets, do you have any concern about the degree of deference that potential legislation might give to agency regulation? For example, the divide between federal and state regulation of stablecoin issuers and the safe harbors the Treasury may grant to the creation of stablecoin issuers under unusual and exigent circumstances. How do you feel about what's pending currently in the change of market infrastructure and its regulation?
Yeah, so I'll take that to start with. We are definitely in favor of legislation that helps explain what is allowed to happen in this space and what's not allowed to happen. I think from time now, degree or another, has been a little bit of a Wild West for really any user of the technology, simply because legislation has one, largely not existed, and two, been quite different depending on its jurisdiction. So in particular, the pending legislation that I want to talk about is the Genius Act, which is, I believe, in front of Congress right now. I guess that might change depending on when this podcast goes out. But what's important in this bill is that it controls the way stablecoin issuers are allowed to operate and how they can issue stablecoin. Like, what is a stablecoin really? It is a digital representation of some fiat tool. And for stablecoins that we use, that Endaoment uses, and that are used widely both in and outside of the United States, those stablecoins are pegged to a US dollar, such that one stablecoin, one USDC, which is the stablecoin that serves as the unit of account within the Endaoment system, again, put out by Circle, equals exactly $1. And what the Genius Act does is it says to all stablecoin issuers, something that Circle has been doing since we started working with them back in 2020, that every single stablecoin that's out there that you issue must always be redeemable for exactly $1. And that if you are issuing stablecoins, you need to make sure that you have cash or cash equivalent to back up any stablecoins that exist. So for as long as we've been operating, which is now, just under 5 years, it's been an exciting journey. There's never been a time that we've been unable to redeem any single stablecoin for exactly that amount of USD. And we really like the way that the Genius Act is formulated to require that that's the case and to create an opportunity for the agencies and regulators that be to go after entities that are creating stablecoin and then using dollars that people are purchasing those stablecoin with to be speculative or to take bets on the market. And instead, they're treating it like they can only keep it in cash or in US treasuries. And that's basically it. We really like to see that. And as we evaluate regularly the stablecoin system that we use, again, USDC from Circle versus other stablecoins that exist, both one-to-one backed and algorithmic, which are getting kind of wiped out by this Genius Act legislation, it was always important to us to make sure that we're not working with algorithmic stablecoins, which means they're not one-to-one backed, and also that the organization that we're working with is reputable enough to always maintain that one-to-one peg for redeeming or for minting new stablecoin, right? Because it's really a two-way system. Either I have stablecoin and I want to give it to Circle and they give me the US dollars in my bank account, or I send Circle the US dollars in my bank account and they mint me new stablecoin. So it's got to work both ways in order for an organization like Endaoment to do what we do.
Oh, I agree. And when there is concern about some states lagging behind, the pending version, I guess, of the Genius Act does require that each state meet a given set federal LCD in its regulation of their state-approved issuers, which does relieve some concern. Kevin, how do you feel about the Genius Act or any of all of that and how it affects Doctors Without Borders?
Lori, I appreciate you asking. The way I feel about it is I'm really happy that there are people like Zack and his team that are focusing on this, that are really diving into it, as well as all of the lawyers that are working through it. As a fundraiser, I am very dependent on my infrastructure and my legal team. So I will just leave it at that I'm very happy that I've got a bunch of really bright people that are focused on this.
Okay, that's terrific. Another aspect, I guess, of current legislation that the Genius Act might lend itself to is with respect to clarity and definitions of digital assets and when they are securities and when they are not, based upon function in the transaction in which they are a part of. How do you believe this to do with reliance upon the expertise of regulators in a case-by-case basis, or do you believe that the legislation would be able to sufficiently define when something is a security and when it is not? How about Kevin? Do you have a subject matter you want to defer to?
I'm looking at
Lori,
I'm looking around the room, and it seems like Zach again might have a better hold on this than me. I'm a little out of my depths on that, Lori.
It's a murky field. What counts as a security? What counts as a commodity? And also, it's really important because that actually changes the regulators and their ability to and not just regulate, but help explain kind of what rules apply to which assets, right? And, while I won't speak specifically on any assets that are securities or are commodities or are both or neither, I think it's really important to set standards that allow us to not go on a case-by-case basis, but really have standards that are applied throughout the industry, whether that is about distribution, meaning decentralization of the assets and of the networks, whether it is about the ability in the past for insiders to pre-purchase any specific asset or token before that's available to the market. I'll leave those questions to people smarter than me, regulators who are working in the government. But the thing that's most important from our perspective is that there is consistency, whether you're talking about assets on the Ethereum blockchain or on the Solana blockchain, or you're talking about Bitcoin, or you're talking about NFTs. There needs to be a consolidated set of rules at the federal level that folks can look to understand kind of what regulatory apparatus lends itself to management of any particular asset. And to that end, I'll just say that it's important for Endaoment that we are supporting, while we don't directly lobby because we're a 501c3, it's important to us to have just legislation be out there so things are clear. I think the thing that stands in the way, whether you were a donor or maybe a potential investor of cryptocurrency, so nonprofits who are thinking about raising funds either directly in cryptocurrency or through an organization like Endaoment, the murk of lack of regulation and lack of clarity is probably, in my mind, like the worst thing for the industry and for wider adoption. Because once you have rules, you can iterate on those rules. People can say, hey, you didn't create a carve out for this reason or that reason. But if we don't have policy, or if there are policies at the federal and state level that conflict with one another, it's just going to feel like it is too risky a space for people to get involved with. And the more clarity that we can establish from the legal perspective, I think the easier it will be for not just regulators, but, thinking about, Kevin, your answer about all the people that you depend on, whether it's folks that do infrastructure or legal or finance, all of those folks that are compliance minded will have an easier time saying yes when there's clear regulation and clarity that comes from a top-down system.
thank you. Thank you very much, Zack. And I think unless any of our other
I'd love to jump in with
stuff.
one more question actually before we back to wrap up here, if that's okay. I mean, I think just kind of jumping back to Lori, what you said at the intro, and Danny, to you as well. The subcommittee here is sort of intended to help nonprofits figure out what to do in the digital asset space. And I'd be curious to hear from both of you just in the last couple of minutes, if you can, sort of, we've gone through a lot of what you thought about in your specific situations for each of your organizations as to considerations, all of that. I think there is still, for a lot of the reasons that we've discussed, kind of uncertainty and sort of fear of risk and things like that with nonprofit organizations, ranging from small nonprofit organizations who don't have the ability to necessarily accept contributions themselves, or that are not aware of organizations like Endaoment or others who can help them with that, to large nonprofits who may, be investing, frankly, on like the endowment side in crypto, but on the development side still be sort of not quite having figured out how to fundraise and how to accept assets in that area. What would sort of your advice be to a nonprofit organization and of any size thinking about what should we do in this emerging space, and how should we make sure that we are moving our organization forward in a way that keeps us, I don't know if cutting edge is the right word, but kind of keeps us in a place where we're able to work with donors who are increasingly interested in making gifts of this type?
Yeah, I'll jump in on that. I mean, I like the word that you even used, but cutting edge. And I don't think that that typically gets thrown out there in the same sentence as nonprofit. But there's an opportunity to change that. And I think one of the things that organizations can do, and it doesn't have to be anything big, but like actually be intentional of like when you're creating your annual plans and you're even creating budgets, and think about R&D. I mean, for-profits always have an R&D budget. Why can't nonprofits have that? And it's a matter of like, if you're being intentional and you're putting that to paper, then you're going to make the time for it, because that's what you're being delivered on, like as a organization, as a department, as individual goals. Okay, what are you doing to kind of push the envelope? And then I think with digital assets specifically, I think it's a matter of to say like, hey, if you haven't moved forward in this arena yet, is that I would connect with peers that have. And certainly the way that we all get better is that we learn from mistakes. And so how can you learn from their mistakes so you're not making the same ones? And I think that the last piece of advice that I would give is just like, it doesn't have to be as scary as you think it is that you do have folks that are out there that have built infrastructure that can help support. So if you're worried about kind of the timeliness of it, the acknowledgement side of it, the information that's coming through, the anonymity, all of that, that's all been figured out. And so there does kind of break down a lot of those barriers that could be standing in your way that you think that are, but probably are.
Yeah, to add on to that, I think maybe the most common question that I get from nonprofits after they find endowment, sometimes they find endowment because they have a donor waiting in the wings. It's like, I want to give Bitcoin. And the nonprofit's like, we don't know how to support that. Let us go searching for someone that can help. But also all the time, organizations are getting set up with us because they want to make sure that when that donor shows up, that they have a pathway. And the question I get from those organizations is, you know how to pay us out. What do I do? And what's really interesting is that the most effective thing that I've ever seen a nonprofit do in terms of fundraising and digital assets is just to reach out to their existing donor base, folks they already have emails for in their CRM, and say, hey, we can now accept Bitcoin, Ethereum, NFTs, and really any other cryptocurrency that you have, whether through a relationship with Endaoment or another entity that serves that same purpose. And donors that you already are working with and maybe don't know that they just have some Ethereum, Bitcoin, or other digital asset, say, oh, that's actually really great because that's advantageous to me. Again, really low cost basis, appreciated assets, the best thing to be able to donate in terms of your ability to get a deduction. So, the thing that I always recommend for nonprofits to get started is, one, you can always come to endaoment.org and get set up in case donors are showing up, or find organizations that are serving that need in some other way. But two, really talk to your existing donor base, figure out which assets they have and how they'd like to be giving them to you, be making those donations. And typically when there's a donation waiting in the wings, it is a lot easier. It kind of greases the wheels of the nonprofit, be it from a legal, compliance, finance, infrastructure perspectives, to actually get the ball rolling in terms of going from wherever you're at to, as you put, being a cutting edge organization that's able to receive whatever assets donors have that they want to be generous with.
Thank you both.
This has been an incredibly informative conversation. We thank our panelists for sharing their time and expertise. And Lori, would you like to close it out?
As Dana said, we thank you all and all subcommittee members. We hope today's conversation helps organizations partake in listening and following up in any way that the city bar may be helpful. And we do hope you take your first or next step in engaging in digital assets.
Thank you for listening to this episode of the New York City Bar Association podcast. Opinions expressed are those of the speakers and not necessarily of the City Bar. If you enjoyed this podcast, please like and subscribe wherever you listen. Find more City Bar podcasts on Apple, Spotify, YouTube Music, iHeart, or at our website at www.nycbar.org/podcasts. Be sure to check out This Lawyer's Life, a professional development podcast where we talk with lawyers about seizing opportunities, learning lessons the hard way, and about what makes them tick. And don't miss Building Belonging, a podcast that embraces authentic conversations about DEIB solutions by amplifying the most marginalized voices in the legal industry and exploring spaces others dare not. This podcast was produced and edited by Eli Cohen and Jalen Martin.